You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means it is time for the Futures Rundown. Today, it also means it is time for a wild one. Buckle up, strap in. We are going into some historic, unprecedented waters here on the show today. Should be a fun one. Remember, if you want to join us for the live, you don't want to wait for the podcast to hit. You want to, of course, get pro Q&As like we had earlier this week with the nemesis of a certain person on the show today, a.k.a. Mr. Dr. Vix, a.k.a. Russell Rhodes. That was a hot one just yesterday. Really good time to be talking about vol, and we did all that on the Pro Q&A. If you want to check that out, you want to join us for what weird and wild trades we're seeing and indeed putting on. That's on Options Oddities every week. You get your own podcast feed. You get a lot of great stuff. Only place to get it, theoptionsinsider.com/pro. is the place to go to learn more. As we are joined by the nemesis of our Pro Q&A guest yesterday. Yes, none other than Miss Carly Garner from DeCarly Trading. Carly, I'd say welcome on, but it's a bit of a wild day. How you doing today? How you holding up so far? Carly, are you there? Can you hear me?
Yep, I'm here. Sorry, it's been a super wild day. The only thing that I can say is that I'm breathing. So I'm not dead, but I feel dead.
Is the phone just ringing off the hook like crazy today?
Oh, you can't even imagine. It's just wild. I mean, it's good, obviously good for business, and we've had some luck. So luckily we've been on the right side of a lot of things, but it's super exhausting. Very exhausting.
All right, before she collapses, listeners, let's dive right on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, I have a lot to get into, but Carly, I planned to start today with you anyway, just getting your thoughts here at the top of the show on the massive nigh on unprecedented volatility we've been seeing in the equity markets and in other markets like, metals and fixed income and everything. But then, of course, they had to drop the other shoe today. Right before we started the show, we've been selling off for pretty much a week now, pretty aggressively in the broad equities and a lot of other related asset classes, listeners. Today, it seems like there might be a little bit of a detente, a little bit of a ray of sunshine there on the trade war front, 90-day halt for most countries, not named China. So the market's liking that. We are seeing a not quite unprecedented, but pretty darn historic. We crunched the numbers on the option block, on options bootcamp just earlier today. And today's roughly 8+% move to the upside. If you take out the wild days of 1933 when the S&P really wasn't what it is today, you really have to go back to 2008 and March of 2020 to find any other days that beat this in terms of upside days. So you're talking really a top 5 upside day for modern market history. If you go back to 1933, you're talking, top 15 probably, but still. Wild times. That said, Carly, the floor is yours. You can vent your spleen. What has been lighting up your tape leading into today? And then what are your thoughts on this nigh on historic rally we're seeing out there today?
Well, I've been doing this a long time. I've been in this business for over 20 years. I've only seen a couple of days quite like what we've seen 2 or 3 days of this week. This has really been, as you mentioned, unprecedented. It's really easy to get whipsawed. All I can say is if you're going to trade futures, hedge with options, and or at least make sure you have stops. Keep in mind a lot of traders are learning this the hard way, that stops aren't guaranteed. Markets can gap through them during the overnight session or from Friday to Sunday. But even during the middle of a normal trading day, let's say like on a Monday, if the markets are extremely volatile, it might be that there's nobody to take the other side of your stop order. So just warning people, stops aren't guaranteed. So don't set it and forget it and not look at it for a couple hours, because in these types of markets, we're getting months or years worth of movement in hours. So not a time to not pay attention for sure.
So what are the hot products at the Carly today? Is it all equities all the time? What's lighting up the tape?
We were lucky enough to get some S&P trades off before the announcement. Better to be lucky than good. I'm not saying I have crystal ball. It's sometimes you just get lucky. So we've been watching the S&P pretty closely. The bond market kind of crashed overnight. So we bought some 10-year note calls this morning and hoping that rebounds and reverses itself. It feels really odd to see the bond market behaving the way it is. Inflation really isn't the threat it was a couple of years ago. It feels to me like maybe it was some sort of hedge fund blow up, or the last time I saw the bond market behave like this was when the SBV bank blew up a couple of years ago. So there's something under the surface that we don't know about. I'm sure it'll come to the surface, but so the financials are really driving the party here.
That's something I wanted to talk to you about today, till today's news kind of kicked it to the curb. But you're right, this notion of the bonds not exactly doing what anyone anticipated in this market. You would think, a little bit of a crash in the broad equities would be decent news for bondholders, and yet not the case. Yields remaining stubbornly high, and bonds taking a bit of a hit. So you're right. It does seem like something else is lurking out there that we're not aware of yet, because this is, I don't know, when I first cracked the finance textbook in school, Carly, they told me they're supposed to move in opposite directions. Isn't that the way it's supposed to go?
They're supposed to. That has not been the case since basically 2022. So there's some dysfunction going on there. And we have to, couple just in broad stroke ideas. The bond market for a long time was manipulated by the Fed and monetary policy. So we held rates really artificially low for years. And I think we're still working that out of the system. We have to build, trust back up. We have to work out all the creative programs that kept interest rates capped. And the interesting thing is we actually saw the opposite in the stock market. So while we were artificially holding bonds low, we've been kind of artificially holding the stock market up. And we saw some of that unwind here in the last couple of weeks. So very interesting times.
Interesting times indeed. Let's crunch some of the numbers, listeners. And it's so hot today, we may have to do a today breakdown as well. We usually just do what's been happening this week and since our last show, but we're obviously in unprecedented waters here, listeners. just on top of the fact that no one in the modern market has lived through a global trade war. You have to really go back to the days of 1930 really to see anything like it. So from a modern markets perspective, no one has really seen anything like this. So we are in many ways in nigh on unprecedented waters out there, which is why we're probably going to do a top 6 today in terms of what's lighting up the upside this week, listeners, because you'll see number 1 in a second, kind of a bit of a cheat. All right, so number 6/5, listeners, is our old pal Rough Rice, having a good week this week, up 2.42%. It's not going to look that awesome when you see our number 1, but again, that's kind of a bit of an outlier. Number 4, listeners, or 5/4 really, is soybean meal, up 2.58% this week. And then number 4/3, we've got our old pal, the yen, 3.36% to the upside. And then we've got number 3/2, our old pal OJ getting some back this week, up 4.03%. And then number 1, really for this week, it's really 2 net on our list, but really should be number 1. It's our old pal, the Swiss franc, up 4.77%. Now take all of that and forget it when I give you the number 1, listeners, because it's just a beast. It's our old pal, the VIX. This is what happens when you include VIX futures in the rundown, listeners. The VIX up 88.5% since our show last week. I mean, just wild times. Now, of course, it's coming crashing back to earth today. So if we look at today's movers, going to be a bit of a different story. But that's why we do a top 6, because VIX, kind of a bit of an outlier. It's not really fair to include VIX along with Rough Rice. That said, Carly, anything catching your eye in our upside top 5/6 of rice, soybean meal, the yen, OJ, the Swiss franc, and for good measure, the VIX?
Well, obviously the VIX stands out due to the sheer size of it. But I will point out, when markets get this volatile, they can get a little more crazy, but they generally don't. And so be very careful if you think that buying options is a great way to go because you have limited risk. The reality is that the VIX will get what's called a VIX crush, and the volatility will come out of the options, and it's going to be a tough game trying to buy options from here. So maybe trade mini or micro futures with stops or some sort of option spreads, but that VIX will come back and bite people.
All right, listeners, let's go out and see what's biting to the downside right now this week. Again, we have a 6-name list. You could probably guess why here this week, listeners. We've got number 5/6. We got high-grade copper giving up the ghost this week. Downside a lot more stark than the upside this week, with the exception of today, obviously. Off 16.5% is copper this week. And then number 5/4 is good old RBOB, off 18.67%. And then number 4/3, we got our old pal crude oil, off 19.4%. With all this trade war talk going on, a lot of people thought demand was going to start drying up. Either way, we've got crude oil 19, almost 20% to the downside this week. That's Brent. And then right behind it, we have WTI coming in off 20.23% at the number 3/2 spot out there, listeners. And then the number 2/1, listeners. It's been this way for a while. You know what it is. It's Ether at this point. The micro and the big futures off 21.66 and 21.71% respectively this week. So wild times, crappy times out there in Ether. Now, if you're upset about Ether, I may have some data to share with you in a little bit that may turn that frown upside down. But Carly, what are your thoughts here on our downside movers this week? Copper, RBOB, Brent, WTI, and Ether.
The copper move, I think, is probably the most significant out of all of those. It's been a really wild ride. If anyone that's following copper knows, it rallied up above $5. In fact, almost got to $5.50 on the idea that there was going to be tariffs and they were going to directly impact copper, and everything got really wild. And then there was a rug pull and we dropped over $1 in a very short amount of time. So this has been a really, really crazy market. But pay attention to $4. As long as copper can hold $3.90, $4 area, which I believe it will, I think it'll bounce out of here. That's actually a sign that maybe things aren't as bad as they feel. Like, it feels really bad because the stocks are all over the place and crude's tanking. But if copper can hold $3.90, $4, that's a sign that maybe there is some economic activity going on down there, and all this is just noise. So stay tuned.
Speaking of noise, listeners, we're getting a lot of noise in the market today. It's such an unprecedented day out there, listeners. Let's look really quickly and see what's moving and shaking just today. I said we might have some good news for you Ether bulls out there. We said we're selling off quite a bit. It is still selling off for the year. But today, getting some of that back, up 11.6% is Ether, our number one upside mover. 8% for the S&P mid cap. The NASDAQ up 9.45%. My goodness, the NASDAQ. OJ up 10.65% today. The S&P E-minis up a paltry 7.5% today. Russell 2000 up 7.33%. And Bitcoin up a little over 7%. So much for the uncorrelated crowd. A Bitcoin catching a bid along with everything else, Carly. Any surprises in today's upside movers?
Honestly, I think they're all surprises, right? So it's been one of those days.
I guess technically they are. You are correct, yes.
Yeah, I mean, all we can do is take this day by day. A couple things I'll point out, if we're talking about, like, for example, the rally in the S&P or the rally in crude oil, they've been massive from the lows. But what was previously support is now going to act as resistance. So if we're talking about crude oil, $65 a barrel is going to be pretty sharp resistance. And in the S&P, we're looking at like 4,500, 4,400. And the S&P is going to be 5,400. Sorry. Such big price moves, the handles are getting mixed up. 5,400 and the S&P is really thick resistance. So everything looks great today. Let's see what tomorrow looks like. Could be a different story. I hope not, but it could be.
Let's talk a little downside out there today. Yes, some things are actually losing value today, Carly. It is possible. I know it seems unprecedented. Obviously, obviously one of them is going to be pretty obvious when you heard about what we were talking about earlier in our number one listeners. Let's do a quick bottom five here today. Number 5 off 1%. Let's go to number 4. Let's go to ethanol off 2% today. Dry whey 2.17%. Sugar off 2.25%. And you could probably guess the number one downside mover, listeners and Carly. Yeah, it's the VIX, giving up nearly 30% just today, Carly. So wild times. Do you have any VIX or vol traders over there at the Carly?
We have a lot of option sellers and option spread traders. We actually did a butterfly spread yesterday in the S&P. A downside, we were able to get a 500-point spread for $1,000. Now, obviously, the market rallied today, but I wouldn't be shocked to see us go down and retest lows and do that sort of thing. So the volatility is awful if you're already in with short options, but if you're not, it's a really amazing time to put on some nice option spreads. Even with limited risk, you can get some really high probability. Well, maybe not high probability, but high payout, low risk, limited risk spreads, and just see what happens, because nobody has a crystal ball. You have to be in it to win it. That's what I say.
Do you have to be in it to win it, listeners? Let's look really quickly before we get to today's action. Let's look at our trends for the year out here. How are things shaping up? Today's action, throwing a little wrench in some of these trends, so we re-rack the numbers for you, listeners. Year to date, listeners, and again, we did a top 6 to the upside just because, again, number 1, you could probably guess what it is, and it is somewhat of an outlier. So number 6 for the year, it's our old pal, the yen, up 7.33%. Number 5, listeners, it's soybean oil, up 9.44% for the year. Number 3, all you Starbucks fans, still have to cover your ears. It's coffee, up nearly 12% so far year to date. Number 3, listeners, our old pal Nat Gas, up 11.91%. No one told Nat Gas that we're heading into the seasonally quiet downturn period, post-winter into spring, because Nat Gas still up. And then number 2, you could probably guess, it's Carly's favorite. She's been on here very recently talking a lot of smack about it. It's gold, up 15.3%. And number 1, again, an outlier, so take it with a grain of salt, but it is the VIX, up 107%. At least it was when we ran this number a little while ago. I'm sure if I re-racked it now, Carly, it'd be a lot lower. But that said, what are your thoughts on your good buddy gold maybe outperforming a little bit, and anything else catching your eye so far year to date?
Well, we are net short gold using options, so we've got room for error, but I don't love to see what I see today. However, this is kind of par for the course for gold. It never gives up the ghost easily. So as of now, I still think we're in the process of a top. A process is not a day. It's not an event. It's a it takes some time. So I wouldn't be surprised to see it retest highs, that sort of thing. But I would say if you're a long-term gold holder, I'd say probably lock in or take some profits, because I've seen this market before. 2011, we had a very, very similar chart setup, fundamental setup, and crude oil dropped 45% and stayed down for about a decade. So not trying to scare anyone, but I'm just trying to remind everyone, history can repeat itself. In fact, it usually does.
All right, let's go to the dark side now for the year, listeners. Again, we're doing a 6. You can guess why. Number 6, it's good old cocoa off 20.75%. Followed by number 5, the Russell 2000 was having a rough year so far. Looking a little bit better now, but off 22.14% is the Russell 2000. And let's just look really quickly. Let's do an updated number to make sure that, let's just see where year to date, how bad the Russell 2000 is still hanging out. Yeah, it's even with today's latest move, it's still off 15.61%, listeners. So, yeah, a rough year for the small caps, but looking a little bit better. Your nemesis, Dr. Vix, yesterday was talking about how he was starting to position himself in small caps. So he's looking pretty good today. But number 4, listeners, we've got dry whey off 34.5%. So just a whey apocalypse out there. Number 3, you know what it is. It's OJ off 45.22%, and then 2/1. It's the Ether, micro and the big, 56.62% to the downside. Again, getting some of that back today. But Carly, all the Ether bulls, they were coming into this year, hoping this was the year for the turnaround, a year for ETH to catch up on Bitcoin and Solana, and instead it's leading the charge to the downside, Carly.
I'm not smart enough to have a specific comment on Ether or Bitcoin, but one thing I can say is we're having a similar conversation in gold and silver, right? Silver's been lagging gold, and there's the idea that silver's going to catch up to gold. And I think that that's actually a false premise. I think they both roll over together. We've seen silver do the opposite of catching up with gold in the last couple of days, and I think that's going to continue. So maybe that applies to Ether and Bitcoin. I'm not sure. I'm not that smart.
And before we roll out of this into today's activity, it's just curious, are there any weird or strange products lighting up your tape that your customers are calling you about this past week that you maybe didn't expect with all this craziness going on, Carly?
We have a lot of clients that are interested in grains today, which is not really unusual for our clients, but what isn't unusual is with all of the chaos that's going on in the financials and the currencies and everything else, the grain markets have been actually kind of quietly constructive. So while everything else is crashing down, the grain markets, which suffered the biggest losses during the last tariff war, or arguably the biggest, have actually performed just fine. So we have a lot of people that are focused on grains.
Interesting. They're going for what are, at least right now, the comparatively quieter markets, Carly. They're like, you know what? The hell with all this equity noise or the metals or rates or all the other products that are just going crazy, crypto. Mm-hmm. Let's go to the comparatively quiet waters of the ags, listeners. Does that count as you, listeners? Are you heading out to ags for a little bit of calm? Are you just sitting in cash because this is all too wild for you? Hit us up, let us know. Let's see what's lighting it up today, Carly, shall we? Because it's a wild day, just to put it mildly out there, listeners. All right, let's do a top 15 because it is wild. And we thought we'd just keep everything in today, including the micros, because it's just one of those days, listeners. So we'll expand it to a top 15. Number 15, again, this was right before the show started. I'm sure there's more volume that has snuck in as we've been talking here. Number 15, we're going out to the euro, going out to the land of FX, the June contract, 383,000 contracts on the tape. Of course, Europe meeting, talking about retaliatory tariffs against the United States. So FX very much in the headlines right now as we're talking trade wars and tariffs. Number 14, keeping it in the land of FX. It's the yen, also going out to June. In fact, looks like most of these are June with the exception of 2. You'll hear those in a second, listeners. So the yen, 414,000 contracts on the tape there for number 14. Number 13, our good pal, Mr. Dr. Vix, will be happy to hear that his long Russell is paying off. You know, Russell being long Russell. I'm sure there's some meta to that. The Russell 2000 E-mini putting up 424,000 contracts and the number 13 spot. Number 12, listeners, we're going out to crude oil. Crude oil, aka WTI, number 12, 527,000 contracts. Also one of the few non-June contracts on our tape today. It is the May WTI contract, so even more near dated. Number 11, our first rates in our top 15. That should show you where all the rates are hanging out. They're all in the top 10. It's a hot time for rates. Number 11 is the Ultra T-Bond. 799,000 contracts on the tape. Number 10, to the realm of equities we go. It is the NASDAQ 100 E-mini. 857,000 contracts on the tape. The NASDAQ, like a lot of indexes, having a good year just today. The index is average, usually around, 7-8% in a year. Putting that up today and then some. So wild times in the NASDAQ. Number 9, back to the rates we go. It's the 30-year, 1.24 million contracts on the tape already. Number 8, our old pal, 3-month SOFR, the other non-June contract on our most actives today. We all know if you've been listening to the show for a while. In fact, Carly and I did a deep dive on all the questions you might have about SOFR. Check out that episode if you are intrigued or perhaps a little bit intimidated by that product. I get it. But SOFR trades on its own schedule, its own rules of engagement. It likes to hang out in December, and that is the case again today. The DEES contract, nearly 1.6 million contracts, listeners. It's 1.59 million contracts on the tape as we kicked off the show. Number 7, keeping it in the rates, it's the Ultra 10-year, and yes, everything else is June, listeners. It's the Ultra 10-year, 1.67 million contracts. Number 6, going back to the realm of equities, it's the E-mini, 2.2 million contracts on the tape already. Number 5, off to the realm of rates again, it is the 2-year, 2.46 million contracts on the tape. Number 4, going back to the realm of equities, a product we usually excise from this list because it's a micro, but we'll keep it in there for today. It's the S&P 500 micro, 2.64 million contracts. Number 3, keeping it in the realm of equity micros, it's the NASDAQ micro, 2.681, so about 20,000 more contracts on the NASDAQ micro versus the S&P micro. It makes sense. NASDAQ outperforming a little bit to the upside today. And number 2, back to rates, it's the 5-year note, 3.57 million. And the big dog today, Carly, once again, it's the 10-year. Nothing can displace the 10-year these days. 4.57 million contracts on the tape already. So pretty much double what we see in an average day at this point of the day already right now. Carly, anything interesting, any surprises in that list of our top 15 most active today, Carly?
Not really any surprises, particularly in the treasuries. As I mentioned earlier in the show, the overnight session was completely wild. A lot of you might have even missed that. Basically the 30-year bond has dropped 10 points in 3 days. I don't think that's. I'm not going to say it's ever happened, but I've never seen that happen. And I've been doing this for a very long time. 20 years, I don't think I've ever seen that happen. And it looks like we're erasing most of those losses. So that's interesting. So I assume that there were a lot of people that were liquidated, maybe forced liquidated, maybe stopped out, maybe panicked out, and then rebought. So it makes sense that would be a very high volume contract because, I hope that they rebought because I'd hate to see anyone get stopped out at the low and then look at the quote board at the end of the day.
That's a bad trading day. We've all been somewhere in that vicinity, and it's never a good feeling out there. So yes, whoever
happens.
Whoever did get stopped out or forced out of that level, that's a bit of a rough one, listeners. But you know what's never rough? It's your questions. Let's get to them now. A little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, listeners, wild times. If you're listening live, if you guys have some questions, need to be talked off the ledge. I get it. It's a wild time. They're talking about all their inverse vol trades that they're putting on there in the live chat. I get it. It's a good day to be slinging some SVIX out there, listeners, a pretty active one. They want to be talked off the ledge of trading more. I hear you. Sometimes it's tempting to overtrade on days like today. But Carly, we had some interesting polls and questions of the week out there this week. I want to get your thoughts on, including just yesterday when we saw another whipsaw day. It started off rallying, then we saw some whipsaws. We thought, you know what? Good time to ask our audience, quite simply, are you buying what the market is selling? Is this a real rally? Does this have legs, or is it just a dead cat bounce? And Carly, 82.2% of our audience said fade this. stay short or stay in cash. Only 17.8% made what turned out to be the right trade, Carly, which is they said, get long SPX now, because if you did that, you're up somewhere in the ballpark of 8%, Carly. So what are your thoughts? Our audience fading it looks like to their peril today.
You know what's interesting about this is the 80-20 rule right there flashing us in the face. And I found this to be true, and I'm not trying to insult anyone. I'm wrong all the time. But generally speaking, 80% of the time, or 80% of the people are generally wrong about market speculation, and 20% are usually right. So that's pretty par for the course, to be honest. I hate to say that, but that's reality. If everybody has the same idea and everyone's in the same expecting the same thing, they've probably already taken action in the markets, and the markets generally do the opposite, is what I'm trying to say.
I know it's a futures show. We had a question of the week last week I want to get your thoughts on as well, Carly, because you do sling a few options over there, and also you've written a few books about options. We asked our folks last week, very simply, what stock price or what underlying price do you say, the heck with it, I'm just going to trade the underlying? What's your cutoff? You said, is it $10? Is it $5? Is it $2? Or are you a no limits wild person? And Carly, what are your own internal rules? Do you have a cutoff, or are you a no limits wild woman? And then B, which way do you think our audience is going?
Well, so I am not mentally capable of trading futures with any type of success. Like it just stresses me out. I can trade options. I can have short options with naked risk, and I'm cool as a cucumber. But as soon as I try trading a futures contract, particularly with stops where you're prone to get stopped out and prematurely, it's just not for me. The thing about trading is everybody's different. You have to find what works for your mindset and your personality. What I've found to be a good approach for my personality is if we're doing option spreads and we're selling naked legs or whatever the case is, and we start to get into trouble on those, we'll hedge it with micro futures so that we can control our delta, but still stay in the trade, as opposed to like some option traders or some option sellers have rules where they double out or triple out. But the reality is, if you sell an option and you buy it back every time it doubles, you're probably just going to lose 75-80% of your trades. So if you instead practice on hedging to make sure that it doesn't, with the idea, you can't ever make sure, but with the idea of it not running against you wildly naked, I think you do better. But again, everybody's personality is different. If you're somebody that's black and white and you don't like fuzzy math, maybe that's hedging with micros isn't for you. But for me, it's the answer is almost always options, not futures.
All right. Our audience, Carly, they are a bunch of no limits wild people.
Well, what I can say is I have been doing this long enough to recognize that a lot of people actually hurt themselves using stop loss orders. I know that sounds crazy because everyone says don't trade without a stop, because darned if you do, darned if you don't. But so many people place a tight stop and they get stopped out on 90% of the trades, and then the one that they went on, they only make a few bucks. So it's mathematically impossible to make money. So you have to be very careful. Stops are fine as long as you're using them correctly based on your win-reward ratio.
All right, I found the results, Carly. Here we go.
Okay.
And our audience, a bunch of no limits, wild men and women, Carly, 38.1% said they will trade options on anything all the way down to a penny. They have no limits, Carly. And then 28.6%, so number 2, going for the more traditional cutoff of $10, Carly. Number 3, 23.8%, say $5, also a reasonable level. 9.5% went with $2, Carly. That's their cutoff.
Wow.
So,
okay.
Wild stuff.
If we're talking about premium paid, I guess I misunderstood the question. But this is my rule of thumb. Every market's a little bit different. But I generally, if I'm just buying options outright, I would probably don't ever spend more than $800 or $900. So that's maybe a more appropriate answer.
There you go. Listen, that's Carly's rule. Before we get out of here, Carly, we got a question in our live chat for you. If you think you can handle one more on a wild day already. This comes from Nichols. He just wants to know, is Carly still fading silver here? It's had a decent down move. And yeah, Carly, you've made no secret of your lack of love for the shiny stuff. Gold's had a decent rally, but silver's come under some heat. In fact, I think since you joined us talking about how you didn't really like gold or silver, silver has taken a bit of a beating. It's gone from about $31 at the high last week, down to about, we'll see, at least in the SLV product I know a lot of you like to use, down to about $27. It's hanging out, getting a little bit of a lift today, up to about 28, but still, it's been taking a beating of late. Nichols wants to know in the rest of our chat, are you still fading silver here, or has the sell-off changed your mind?
Nope, hasn't changed my mind. I think the last time I was on, or maybe it was the time before, I think my comment was something like silver's where hopes and dreams go to die. And I got a lot of heat by that comment, from that comment. But I think if you look at a daily chart, you can see exactly what I'm talking about. Just when silver looks the best, when everybody wants to be long and the trend is confirmed, it drops $6-7 in a couple of days. That's not a market I'm interested in being in. I know this week is kind of unusual, but for silver, that's actually very usual. That's what it does. As far as gold goes, I am not a believer that this gold rally is going to continue higher. I know that's not the most popular opinion, but I'd say the 3,200 we saw a week or two ago probably holds. If not, we maybe make a slightly new high. That's how these markets work. But I think we're in the process of some sort of blow off top. So, and it's, again, like I mentioned earlier, it's a process. It's not a day. It's kind of a longer event, maybe a couple weeks. But I think that's what we're doing.
Yeah, I think if you want to go back to your 80-20 rule, I mean, 80+% of people, it seems like, are flocking into gold funds. Didn't they have their highest inflow day ever, I think, this week or last week? So if you want to go by that barometer, Carly, it is time to fade the heck out of gold out here. But great questions. We have to let Carly get back to her phones. I'm sure they're ringing off the hook right now, Carly. I appreciate you taking some time out of an unprecedented busy day to talk with us. Before we go, if our folks want to light up their phone lines for yourselves or maybe follow you on the old socials, where should they go? What should they do?
You can find us on X. At Carly Garner is my handle. Our website is www.decarlytrading.com.
There you go. Find out all you need to know, listeners, decarlytrading.com. And if maybe you need a little bit of help out here, maybe you need a little bit of guidance in some of the realm of futures, options in particular, make sure you're checking out some of Carly's books as well. Just search for wherever you find your finer books, Carly Garner, Garner, and pick one or two or maybe all three of them up to improve your overall options trading. That's going to do it for us here on the network on just a unprecedented day. Glad to see so many of our pro members are having a good day out there today. They stayed nimble for a day like today, and that helps. Having a little bit of extra capital to allocate for times like this, always a good thing. Stay nimble. I say it all the time, listeners. I mean it quite literally. Stay safe out there. These are historic, unprecedented times we're all living through. We want to see you here in the live chat. We want to see you listening on demand. So stay safe out there. By the way, if you want to join us in the live, you want to get access to the pro Q&As and everything else. I guess a lot of you have questions right now. That's a normal thing. If you want to hit us with questions, the pro Q&A is the best place to do that. theoptionsinsider.com/pro. Back again with our usual array of content throughout the rest of the week until we're back again next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.